Hello traders, how are you doing today? Trust you're doing good. So today we are going to analyze this Deriv indices pair, which is called Volatility 5. Okay, Volatility 5, and in brackets 1S. So this is also one of a pair in Deriv indices which you can trade, and it's a very slow moving indices. It's not that volatile. So if your account is small, you can just check the trade. So what are we going to use here to take this trade? First things first, you have to check the direction of your market. This market is a bullish market. You can see price is going upward. This is a daily time frame. And being a daily time frame, it actually talks a lot of where the market is going and where the market is coming from. So this is a daily time frame, and this market has been making higher highs for the last 1 month. Hence, our bias on this market is only a bullish case scenario. So here we are looking for a bullish entry whereby we can take a bullish trade or we can buy the market. And sorry for those who are new, this is where we trade Deriv indices together. The channel itself, the name is saying let's trade Deriv indices together. So if you are new or you are green in issues to do with trading, especially on volatility indices, feel free to ask any question on the comment section. I will guide you. Okay, and thanks so much for coming through, and please don't forget to subscribe to this channel. Okay, so without further ado, let's continue with what we are analyzing today. This pair is very, very good in terms of if your capital is small. And here, let me show you. This is where we are going to base our buy trade. We have said this market is a bullish market, so we are not going to be biased on a sell. We are only going to base our anticipation on a bullish scenario. So this market here is going to go all the way up to this zone, because actually this market had a pullback, and the pullback is over. The market is consuming, or the market is resuming to the previous momentum, which was a bullish scenario. So first thing first, check what yesterday's candle did. This is yesterday's candle, and you can see we had an indecision candlestick here. This is an indecision candlestick, which is more of we call it indecision, or we call it morning star trying to form. So if you have learned patterns of a candlestick, you can clearly see this is a morning star trying to form. And every time you see a morning star, that market is going to buy. The opposite of a morning star is evening star. If you have not been checking your candlestick patterns, there's also a nice guide which talks about all the candlestick patterns. It's in PDF form. If you need it, you can also comment on the comment section below that you need the free PDF on candlestick patterns. Then I'll just email you or forward it to you to your WhatsApp. So this is a morning star trying to form. And opposite of this, you have said it's an evening star. An evening star is more of this one here, which was forming the other day when we had the pullback. So now we are forming another morning star, and this morning star is telling us that the market is going to buy. What are you supposed to dwell on here? Yours is just to put a box on yesterday's candle, because this is a daily time frame. Put your box on yesterday's candle like this. After you have put this box, what you're supposed to do is just wait patiently for this market to break out of this box. Sorry, you just need to give it time to break out of the box. Immediately the price break out of the box, that is when you enter a buy scenario. And how are you going to enter that buy? you have to scale down to a lower time frame. This is daily time frame. We don't take trades in daily time frame. For you to streamline it and to sharpen your entry, you have to scale down to a lower time frame. And from daily, when you go to H4, you can also see price has been making higher highs. Okay, price has been pushing from morning when market opened at 3 a.m. Price has just been pushing up and up. Go to H1. When you go to H1, you can also see the pattern is the same. Market has been making higher highs from this low, making higher highs, pushing up. And when you check clearly in this H1 time frame, you can see our price has just break out of the box, which we draw on the daily candle. This is the daily candle. Let me take you to our daily time frame. See the daily candle, and then when we go back to our H1 time frame, you can now see clearly that price has done what? Price has break out of this box. So if you have been doing issues to do with trading, you know every time a market breaks out of the box, the market has to retest the box or the zone. After it has retested that zone, then the market will do what? Will continue with the momentum. If the market was going up, the market will continue doing what? The market will continue going up. So here we have already break out of this box. Now, the only issue here for you is to ascertain if you are going to take this trade, when are you going to exit? When are you going to take your profit? And in any bad scenario, in case it has not gone to your direction, when are you going to exit? Okay. So those three important factors we should always be in your mind when you are taking a trade. When are you going to exit? When are you going to take your profits? Or when are you going to take partials if you are going to take partials? And in a bad case scenario, in case the market does not go to your direction, how are you going to exit so that you also do what? You also guard your capital. Because here you have to guard your capital. There will always be good setups, and these good setups will always come. And if they come, you must be able to execute. And you can only execute such a market if you have a capital. So always guard your capital. That's the first thing we do when we are trading. So let's go back to our box. This box here has already breakout. We are having a breakout already, and this breakout is what is guiding us to take this trade. And we have said in any market, when we break out of the box, we have to wait for a retest. And let me tell you, in most cases of scenario, you have to scale down to lower time frame for you to do what? For you to see the retest. Let's go to like 15 minutes time frame. Can you see this breakout here? We break. This red candle was the retest candle, and now prices is going up. So this is telling you, you don't need to dwell in one time frame, waiting for a retest. Sometimes the retest happen in lower time frames, like this one, the retest had happened in 15 minutes time frame. There was this pullback candle, which was more of an indecision candle, and then price has been going up. What is important is also this 50 EMA. This one will always guide you. Price had gone up above it, and price broke out of the box, and it has retested the box. So what is important for you here is to take this trade at this zone where price has a break and retest, and then you put your stop loss below the 50 EMA. Very important where you put your stop loss. So when are you going to close this trade? You do your measurement of this box. Measure this box here. Take the same distance. We are taking the same box. Drag it all the way up. How do you drag? You just click on your mouse on the left and you hold as you drag it up. As simple as that. Or you can copy paste if you're using the trading view. This one has no trading view. This is MT5. It doesn't have the copy paste. So you can just drag and drop. So our partials from profit, when we talk of partial profits, we mean you are taking half of your entire box. So this box, you just put your cursor. When you point at it, it will show you the half, and you put a horizontal line. After you've put horizontal line, you wait for price to come to this zone, and you close your trade. You can close partial by closing half, and then you leave the market to run to the end. But in most case scenario, from my experience, I've noticed most of the time, the market will not go all the way to this entire box. So for you to be sure with your profits, just take your market or your profit at this half. Always target the half, close the trade, and don't care what happens to the other half. Even if the market has gone and it has covered it, don't be left there wondering, oh no, I could have just hold on. No. What is important, you have guarded your capital and you have taken that trade and you have taken a little profit. And soon the compounding effect will catch up with you and you'll be profitable. That is very important. What is important is your compounding effect, because some markets will never go all the way here. But also when you check on your left, you can be guided by what is happening here. So that one, we are going to cover it in the next session. This one was only to guide you on how you can take this trade for today and how you can put your stop loss and how you can close in case market has not got your direction. This is almost heading to our take profit, which is here. And from there, you close the market. Don't care what has happened. So far, it has get $4 and here should be $6. And if you have put like 10 trades, that's $60. You just close the market and you continue with the rest of analysis. So please, if you have not subscribed, subscribe to this channel so that you can be getting prompt alert on the best trades to take for a day before the market has moved. Thank you for watching. Bye and see you in the next one.